Let me go across to Deepan Mehta. He's joining us. Elixir Equities. Deepan, earnings coming thick and fast at us. But first off, these big management changes which have been weighed down upon us over the last maybe 24 hours or so, started with Godrej Consumer, and now we have the Tata Sons chairman suggesting that he will be stepping down in February. How big of a change does this mean? Because you're seeing the kind of knock on stock prices. TCS is down 5%.
Good afternoon, Harsh, and thank you for having me on your show. So, I just want to say that when the earlier chairman, Cyrus Mistry, also when he resigned, it was exactly like this. There was so much of uncertainty. Tata Group share prices also fell after that. There was it was not clear who would be the next CMD of Tata Sons. And then we have Mr. N Chandra, and what a fantastic run he has had. He did so much of wealth for shareholders. So I'm not too perturbed about this development. In fact, if you're contemplating buying any Tata Group share, then this is a great opportunity. You're getting these shares 4-5% cheaper. They have a superb talent pool, the Tata Group, and they'll find an appropriate chairman and executive and MD to take over the reins of Tata Sons. The more important thing is that all the companies, they have very solid leadership, and they've been able to guide those companies, be it Indian Hotels or Tata Steel or Tata Motors. Their second line of CEOs for the companies is phenomenal, and they keep attracting excellent talent. So I'm not too perturbed. Also, it's very, very unfortunate that Mr. Chandra has resigned. But I think, it'll be business as usual as soon as the new CMD is announced. So I'm not too perturbed about this development. I've seen this actually happen when Mr. Mistry resigned and then Mr. Chandra came on board, and he has done magic. So I'm sure the next managing director, CMD, also will be able to carry on with the excellent work done by his predecessors.
Wonderful view coming in. The leadership doesn't change the ethos. I think that's where you're coming from, Deepan. What should you buy at a point of time like this? Where is the value or the risk reward looking the best? This is, of course, an opportunity, as you said, Deepan.
See, I think by and large, apart from TCS, where we are still quite uncertain about the way the AI is going to impact these companies, all Tata Group companies, maybe Tata Chemicals, you can add to the list. I think all Tata Group companies, the prospects are decent, whether it's Tata Motors or Tata Motors passenger vehicle. Tata Steel also, I think, has got its roadmap perfect in place. So I don't think it's much of an issue. I think across the board, investors looking for good corporate governance, steady performance, transparency, and good quality balance sheet. I think then Tata Group certainly fits a lot of those criteria. And maybe TCS is undergoing a bit of a challenge because of AI. Apart from that, I think all the companies are pretty decent. We saw numbers coming in from Trent, from Titan, from Indian Hotels. They were all excellent numbers. So you can pick and choose, I think, assuming that you want to take advantage. And as I'm seeing on your screen, the correction is hardly anything. I mean, it's 1% or so for Indian Hotels and Trent and Titan. So it's not much of a buying opportunity per se, with the exception of maybe TCS. But as I said, TCS is something which we're not quite positive on.
Might as well wait and watch. But technicals, Kunal, would a short-term bet play out within the Tata Group at all?
Yeah, this could be a good time to try and look at buying the quality names for the Tata Group of stocks in case if there's any kind of a further drop down into these names, because this generally throws in a good opportunity for long-term investors to buy quality. And when you see stocks, for example, which have done exceptionally well, look at Titan, for example, that stock has done phenomenally well. TCS also, I think, largely, except for this AI correction, the stock has largely done very well. So many of the Tata Group of names have done phenomenally well. We generally look at these kind of instances into the stock price as an opportunity where long-term investors, either they could probably try to look to accumulate further or build up their portfolio by taking fresh bets.
Okay, what we'll do is slip in a very short break, come back. I want to discuss some stocks which have actually done very well month to date. I mean, it's just been 10 or maybe 8 trading sessions of the month. But when you're looking at some movers, Sapphire Foods is up 30%. We'll talk QSR on the other side. I'll quickly take a view from Deepan on the other side of this break with regard to QSR and how he's placing his bets there. Stay with us. Well, Grasim's numbers are out, and it's a very solid beat across the board from the Grasim numbers that we're reading through. The revenue number has come in at 11,795 versus the 12,121 crore number. That's a tad bit lower than what was getting penciled in. The EBITDA number, though, at 950 crore, very impressive versus our expectation of 737 crore, which means that the margins which were expected to come in at 6.1% have actually come in at 8.1%. It's a solid beat. And the profitability also reflecting that, 247 crore of PAT versus the 84 crore number which was penciled in. So you're seeing a very, very strong set of numbers. By the way, this is, of course, standalone numbers for you. The consolidated would technically include Ultratech, and these are the standalone numbers of Grasim that you're seeing on your screen. Clearly, there's good traction in the business. We'll have to wait and watch as to what's really outperformed between chemicals and the fiber business. We'll try and figure that out as well and give you a quick update with regard to that. But revenue largely in line, PAT and EBITDA margins is where the beat is coming from. Deepan, very quickly, I don't know if you have a view with regard to Grasim in particular. The numbers look strong. And if not, how do you look at chemicals and textiles in general as well? If you can give us your perspective.
Yeah, generally we like to avoid diversified businesses because there are just too many moving parts. And if one division does well, other doesn't do well, and one doesn't get a clear-cut play on a specific investment theme. So would avoid holding companies to diversified plays like Grasim. If you want to buy cement, then of course Ultratech is there. It's a great story. And when it comes to paints, there's so much of choice, right from the newly merged JSW Dulux to Asian Paints and some of the other companies over there. So would prefer standalone businesses, focused companies rather than diversified plays. So I would avoid Grasim from that point of view. It's not that the stock is quite cheap as well. And still, I think a lot of businesses of Grasim are scaling up.
I mean, Birla Opus, for example, and we'll have to track that on the con call as well as to what they're saying on Birla Opus. You say not cheap, trades at around 46 times Deepan, which is trailing 12 months. FY26 is what we're looking at in terms of valuations. Clearly, not the cheapest story available. But Kunal, Grasim, as well as some of the conglomerates on charts, if you can give us a sense. I'll also throw in a Reliance, for example, and M&M, for example. How are some of these stocks and stories looking?
See, I think largely Grasim has been performing quite well. It's just that the stock in the last, I think, 2-3 weeks had run up almost 300 points from 3,000 levels as a base towards 3,300, where the stock was trading around. So I think it's largely built into the expectations of traders going into the results for the stock price. I would sense that the stock should consolidate over the year for a few more days. On the other hand, Reliance Industries, I think the stock has been stuck around this 1,300 levels. There was a good move for the stock price almost a week or two back, where it moved up from 1270, 1280 levels towards 1330, 1340 mark. But then the stock has drifted back again towards the midpoint of this trading range. So it looks like that the stock would probably take some bit of more time to try and come back on the upper side. The view on the short-term charts is still bullish for Reliance Industries, and I think that this dip should be bought into. Same is the case with M&M. The stock, I think, has done reasonably well. I've been bullish on the entire auto pack, and my expectation is that I think M&M at 3,300, 3,200 mark, I think could be a good contra bet at the current juncture.
Okay, what we'll do is slip in a very short break, come back, staying with Deepan and Kunal, and we'll be joined by Nagaraj Shetty as well on the other side. Stay with us. Welcome back. Plenty of themes playing out, and Deepan, especially textiles. The numbers here have been particularly strong, and I also want to welcome on board Nagaraj Shetty of HDFC Securities. He'll be here in a minute or so. But Deepan, very quickly, textiles as a pack, is that something you're positive on? How do you play that theme? Do you look at those kinds of players, the PDS and the Pearl Globals of the world, where they're export facing?
Yeah, absolutely. I think with rupee we are at 96 and a lot of free trade agreements getting operationalized. especially UK, India to already is operationalized, and then there's the India EU free trade. And if we are able to get into an agreement with US, then that will open a very good opportunity for Indian apparel manufacturers and exporters. So very positive. I think Pearl Global came with an exceptionally good set of numbers, multi-locational manufacturing, diversified markets, and very strong relationships. Same is true for even Gokuldas Exports and PDS as well. So very positive on the entire segment. One dark horse, again, usual disclosure, is Kitex Garment. And they have merged their private company, which is also into children wear, into the listed entity. And last few years, the performance has been a bit disappointing. But now I think, with the merger in place, all corporate governance issues behind, and looking at the kind of potential which is there, we're very positive on this company, which is very attractively valued also, considering its potential to deliver top line, bottom line.
All right, Deepan, it's been a brief conversation, but it's been a productive one. Thank you so much for coming in and giving us that perspective.